Today is April 5, 3:43 p.m. We saw some unusual options on Macy's, ticker symbol M. So without further ado, let's get right into it because the market is closing soon. And I want everybody to know about this. So the options tape here is showing here that about 10:21 a.m. you'll see these April 14 options. There was 3,750 of them, and you also see this 241. Okay, so these two options, let's take a look at them because they actually are telling a different story. And so let's go with the first one. The April 6th, the April 14th, that's where it was. It was those 3,000 of them. So here it is, the 18 strikes. And here it is. We did a different trade because of the theta decay that is happening very quickly on this one. Here it is at 3,000 there. So what is this? Well, they are buying the 18 calls and then they are selling the 19.5. So this is a bullish trade. It's a vertical bullish trade. And you'll see here as the price goes up, it will profit. So that's bullish. However, the theta is slightly negative, and that's why we did a slightly different trade than this one. So the one we did was a diagonal trade where we sold the 19 calls over here, and then we bought a different date on the 18s, also the 18 strikes, and it's going for $65 right now. And if we take it off, it's also bullish. You'll see here it also profits as it goes up. It's about the same cost, it's slightly more. However, because the reason why we like this trade is because you'll see the theta is actually positive. So if the price doesn't really move very much and stays around this, there is not much decay. And so we prefer that rather than having that negative theta. And that we can also cut the trade sooner if we start to see it going against our projection. So so the other unusual options we saw here, over here on May 19, this is actually a bearish trade over here on the 19th. However, we think this is a hedge here. So this 18 strike here, we think it's a hedge. We think they are selling the calls here because they have stock, and so they're creating a covered call. And then what they're doing with that covered call, the credit here is then they're using it to buy the put to protect their shares. So that's why we are still bullish on Macy's for this. It's a shorter term trade. This is a longer term. They're getting a 45 days of a hedge here. So you'll see this is their trade. It is profits as it goes down. And so if they hold shares, they're actually they're protecting their downside. And we think this is what they're doing right now, is to protect their downside because they are worried that because Macy's dropped 3% today, they're worried that Macy's will continue to drop. It is near this level here, so they're worried it could drop down here. And so it's something that you do want to keep in mind if you do the bullish trade, that Macy's could drop down here to its next around $17 at support. And so it's quite possible it drops here, but it's also quite possible we go up from here in just 9 days, because those bullish options expire in 9 days. Okay, so yeah, if you like this trade idea, please give us a thumbs up and subscribe and hit the bell icon, and you'll be notified whenever we see these unusual options. Good luck trading Macy's.